All right, weekend's over. Weekend's over. Party's over. Back to work. We got some money to make this week. Got a short week at Labor Day weekend, end of the summer, right around the corner. And we got some great trades on our radar for tomorrow. Markets are bullish. Trying to go back and take out last week's big NVIDIA earnings blowout highs there. We get some ranges on the charts right now. We're talking breakouts. We're talking reversals. I have a ton of traps on my radar for tomorrow. There are a lot of really easy ways to make money tomorrow, and I'm going to cover my favorite trades in the video here tonight that will give you a game plan to make some money on Tuesday. Before we jump in, though, and get our hands dirty on these charts tonight, make sure you subscribe to our channel that we don't miss tomorrow night's video. And if you enjoy these videos tonight, do me a favor, will you? Hit that like button for me. Give me a shout out. Introduce yourself down in the comment section below. All kidding aside, though, thank you so much for tuning in, supporting the channel. But let's get ready for Tuesday. Got a lot of exciting trades I'm tracking for Tuesday. Let's start off first, as always, on the 60-minute charts on the S&P and the Nasdaq. I like to use 60-minute time frames to give me a bird's eye view. It helps me plan my trades for the following day. Later on in the video, I'm going to drill down to some tick charts, some faster time frames. Tick charts make the entry timing a whole lot easier. So on the 60-minute, we have a lot of back and forth, right? Big move down, big move up, big move down, big move down, big move up, big move down. It's late August, right? It's end of the summer. This is very common this time of the year to have these big moves back and forth right now. Whenever we have these wild swings back and forth, the key is usually looking at the strong moves. If you watched my video on Thursday night into Friday morning, we had those really strong moves down, right, on Thursday afternoon, and we talked about how whenever we see a strong move, we're looking for a pullback and a retest. Well, now we've got that retest. So now it looks like the buyers are taking back control, and they've got their eyes, it appears right now, to take out those strong moves going higher here. It looks like buyers have one thing on their radar right now: to punch their ticket at those highs from last Wednesday evening. Strong moves will lean on here for tomorrow. Now you'll notice too, we get some ranges on the charts right now. It is late August. It is a short holiday week. It would not surprise anybody if we wind up getting chopped up inside of this trading range. So I'm looking for the buyers to make a run up to retest these highs here today, so tomorrow and Wednesday. But if we don't, I have a game plan to make some money right on the rotation back and forth inside of that trading range. So don't you worry, I get you covered here if these buyers get swallowed up by that trading range. Now, before we drill down and talk about my favorite trades here for tomorrow, let's go take a look here at the schedule, because tomorrow there is a couple things you want to be aware of, specifically the consumer confidence number and the JOLTS report at 10 o'clock Eastern time tomorrow. I wouldn't worry too much about the home price number. The big number tomorrow is that JOLTS report coming out at 10 o'clock Eastern time. So be sure to keep that on your radar. Also be aware too, we're heading into the end of the month. Not just end of the month, the end of the summertime season. I would expect volume to be a little bit lower the deeper we go into this week. We get the big non-farm payroll number coming on Friday. Anytime we have the end of the month, we always expect there to be an uptick in volatility. Combine that with the end of the summer, and we may have another wild week on our hands here this week. Not to worry, we'll make sense of it every morning in our trade room, but just be aware of that. We do expect there to be an uptick in volatility this week as volume dries up into Labor Day weekend. And again, keep an eye on that 10 o'clock, top of the hour tomorrow, consumer confidence, and that JOLTS report. Now, back to our charts, because after all, the money is made on the charts. Let's go over all my favorite trades here for Tuesday. We'll start off here first on the Emini and the SPY, and we'll wrap it up tonight on the Nasdaq and the QQQs. As I mentioned in the introduction, it's been a wild last couple weeks here, right? Big move down, big move up, big move down. And again, when things get wild like this, just look and see what is the most recent strong move that hasn't been taken out. We had that strong run down on Thursday. They punched that ticket and retested that low. You would have thought at that point they would sort of make a run down to take out that low, but they didn't. Now we rotate back higher, and again, it seems like both the buyers on the Nasdaq and the S&P have one thing on their mind right now. It is to punch out those those NVIDIA blowout earnings highs from last week here. So we get a pretty good idea of what direction we're looking at right now. Again, I've got some backup plans here if this range becomes an issue here this week. Let's dive into it though. Let's get to the tick charts here right now. Remember, tick charts, we use tick charts in our trade room because it makes everything easier, right? It makes finding support and resistance easier, entry patterns easier. This is a 7,000 tick chart here on the Emini S&P. And if you're watching for the first time right now, that is the 21 EMA. It's one of the most important indicators we use every morning in our trade room. Now that you know more of what you're looking at right now, what's the most important factor on the tick chart? It's the bullish range. There's a bull move up into a trading range. Now, I know a lot of you guys and gals have taken my free trading classes and you're learning all about ranges. Whenever I see a bull market like this into a trading range, it ultimately tells us there are two basic ways to trade it. One is a breakout pullback. Okay, this is one that makes a lot of sense for tomorrow. We have those big weekly highs from last week. So one of them is a breakout pullback. There are a couple different ways to make money on a breakout pullback. We'll talk about those here in a moment. Another way to make money off a bull market into a trading range is to trap in bears and buy off support levels below that trading range. Always one of the most lucrative ways to do it because the range above us acts like a magnet. What you want to think about when it comes to ranges is that ranges love to rotate back and forth, right? So unless we see a nice juicy breakout, which we'll talk about in a moment, the bears are looking to sell off the high, the buyers looking to buy off the low, buy low, sell high, trade that rotation. So we have a lot to talk about in a very important video here right now. Let's talk about the breakout pullback, right? That's the one that looks like it's setting up next. Later on in the video, though, I'm going to talk about some shorts off the high because we have the pendulum swing right here. We'll talk about reversals off the high, and we'll talk about how to buy the deep pullback because that's probably one of the most lucrative opportunities we have to look for here tomorrow. Now, there are three basic patterns we're looking for on the breakout pullback. It always starts with a breakout trap. What do I mean by that? Well, in the free trading course, we learn about what we call trap patterns. And so if we start really pushing higher here overnight or early tomorrow morning, there's only one entry pattern we're all looking for. It's called a trap pattern. Now, look at how this thing sets up because the way it sets up is really, really important. It'll be a strong pop-up. It'll be a shallow pullback that barely misses or barely touches the 21 moving average. Be a higher high in price and a strong signal candle coming off of that bear trap below it. Again, if you guys are taking my free trading classes, I talk all about traps, right? So as we go higher, that is always going to be the best entry pattern as we go higher. As we begin to pull back, right? Imagine now we go up, we get that trap in as we're going. Let's say now we run into some overhead resistance and we now begin to pull back. This is that breakout pullback. Remember, anytime we see a strong breakout out of a trading range, we now look left and we start using what was the resistance from that trading range as a key area of support. What I'll usually do is look left, start finding some larger channels, draw trend lines off the highs, bring them down off that low, and this area becomes the sweet spot, the high of that trading range along with the channel. Now, how do we time the entry on this? You guys know this if you've taken my free trading classes. This is where that failure into pullback combination is a beautiful setup right here. Now, let's get back below the 21 moving average. When I get back below that 21 EMA, a lot of times what happens is the bears will come in and they'll think this pullback is reversal. And they'll try to short this thing. Again, we're bullish overall. A strong breakout above that trading range. That is not a reversal yet. I'll talk about how to know it's a reversal a bit later on in this video. But right now, though, this is a beautiful opportunity for what I call a failure into pullback combination. right? So think about these two patterns. We get underneath the moving average. We trap the sellers in right into the high of that range. I call these failures. I call these pullbacks. I teach all of these, right? I teach these inside the free trading course, which reminds me, if you're watching for the first time right now, if you haven't taken my free trading classes yet to learn traps, failures, pullback combos, I'll put a link up here for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy I teach in that short video series will show you a stupidly simple trick that we use every morning in our members trade room to know where the best winning trades will be each day. And most importantly, I'll teach you my 4 favorite entry patterns to help kickstart you making money. If you're not making consistent money right now, these markets are way too good not to be doing well. So grab that link, stop missing so many good trades, learn the roadmap, and also too, I'll put all the important links I talk about tonight down the description of the video tonight, all right? So if you can't get the pop-up there, hit me up in the description. I'll put all the important links, especially for that free trading course. All right, so now we've covered, right, the breakout trap and the breakout pullback, okay? Another one, so think about this. We may see this thing squeeze, right? This market may squeeze and run higher, especially on the Nasdaq. Nasdaq is a lot of open space to go overhead. Remember, the S&P and Nasdaq are almost completely interchangeable. They're almost identical. So everything I talk about right now on the Emini SPY can pretty much be applied to the Nasdaq as well. We may snap and run back up and squeeze back up to retest the high. If we do, this is where what I call a pop and grind will be a key here. Now imagine now we open up, we pop up, and we grind. When it begins to grind like that, what that tells you is all the sellers who sold short on Thursday morning, Thursday afternoon, right? That big collapse we saw off the high, they're now getting the heck out of the way here. And now what we can do is go draw a channel tight off the highs. Okay, see how I do that? Off the highs and bring it down off that low. And what do we always say in these? Traps, baby, right? Traps. Traps are usually where the best money is made on these. Now watch closely. I'm going to look left, start finding prior swings. And the goal is I want to try to get underneath one of these prior swings right around the high of that channel. I love traps on these. You guys know me by now, right? I love traps, but this could be any of the entry patterns. It could be trap, failure, pullback combo. Even a strength trade will work here, because remember, whenever we see a breakout, remember this, very important. Whenever we see a breakout, the breakout leg, right? Breakout leg is the measuring leg. So once we know if we have that pop and grind, remember that first leg, take the size of that first leg, pin it down at the low of that pullback, and that will give you now the measured move, right? One of the easiest ways to make more money is not to trade more often. Don't trade more patterns. Simply get better at holding on to your winners and squeezing out more profit out of these. This is an easy way to do that. When you see a range breakout like this, remember this rule. First leg is the measuring leg. Okay, once we know how big that first leg is, then once it pulls back, bingo, now we know where that target is. Stay patient, let that trade work, and it may end up running right into that major high at 85.5, like I mentioned earlier on the 60-minute, all right? So those are kind of the 3 core components I'm looking for as we go higher. On the way up, right, looking for those traps. If it pops, right, and pulls back, we look for that breakout pullback off the high of that trading range. If it pops and grinds, that's your sign now. It's squeezing back up to retest those highs. Draw it tight off the high, mark it off that low, look left, swing, and don't miss that first test, because first test is always the best test. Now, I'm sure someone's wondering, okay, Joe, how do we short this thing now? Remember, for all I know, end of the month, end of August, non-farm payrolls coming later on this week. This range is definitely a wild card for us right now. It does seem that the buyers are trying to retest those highs here right now, but for all I know, we're going to rotate back and forth here during this kind of low volume, late summer sleepy potential market there. Again, hopefully I'm wrong on this. How do we sell this though? What is the best way to short a bull market like this? Well, as I'm always talking about in our video classes, there are two questions you always have to ask. How's my location and how is my momentum? If you can answer these, you'll have the answer to how to short it. How's location? It's great. It's a great place to sell short. It's resistance above a trading range. But how's momentum? Momentum is very, very bullish, not just today, but coming out of Friday afternoon, right? So we're pretty bullish overall. If I want to be a seller right now, I don't want to get caught trying to pick a top on this, right? For all I know, it'll keep on grinding higher. So if I want to be a seller, I need some sort of edge over these buyers. And the way you get an edge is to trap those buyers in and use their stops as fuel. To do that, we're going to use what we call a crown reversal. Now, in my free trading courses, you guys are learning about two patterns: failures and traps. If you put these two patterns together, you get a crown reversal. It's one right there, right in front of us, right? Watch closely. As we go higher and we try to break out of this trading range, remember, ranges are magnets. Ranges are balanced markets. There's no guarantee this thing keeps going here. So once we get up into resistance above that trading range, again, we're anticipating this thing's going to want to keep going and they can grab traps. But there's no guarantee, though. There's no guarantee in any of this stuff. If we start seeing these buyers trying to keep it going, try once and they fail, they try twice and we trap high, that is what we call a crown reversal. All this is, it's a combination of a failure pattern, buyers once, buyers twice. Remember, if I want to short this thing off the high, I need to get an edge. I have no edge right now, right? There's no edge. All momentum is bullish right now. So if I want to short off the high, I need to give the buyers the benefit of the doubt, let them try a couple times, and then think about this. If they're locked in, if the buyers get roped in here, if the buyers start digging their own grave right there, where are their exits? Where are their stops? As my first mentor would always say, where is their pain, right? Think about where those buyers have their pain. Think about where buyers become sellers. So again, as we go higher here, if we don't pop and grind, if we don't break out and then pull back, if we take out that pendulum swing or take out these highs, and all of a sudden now the buyers are struggling. They try once to keep it going higher. Remember, buyers want to buy low, right? They'll try twice to keep it going higher. One try, two try. They're trying to force this thing to break out. Now we know where stops are. Now we know where the fuel is to run this thing back lower again. I'm looking for a bull trap with a proper signal closing below the moving average. You guys will learn about signals in the free trading course and that run back down. All right. That's called a crown reversal. Now that's the ideal short off the high. And again, later on in the video, I'm going to talk about how to buy this thing off the low. We're not done by any means here today. There's a lot of ways to make money in a range-bound market. Let's talk about one more way to short this thing, and then we'll go over the long side here on the Nasdaq. Sometimes what happens is we go up and we V-top and get crushed right back down again. Remember, it's late summer, right? These big V-tops and V-bottoms are going to be more common this time of the year. If we pop up, and again, I would love to get that 1-2 trap and go, but sometimes what happens is it gets smoked and winds up rolling back down. If it rolls back down, where's it trying to go? It's trying to rotate, right? Which means it's trying to take out that low right there. So if we do end up V-topping off the high, we talked about this late last week on Thursday evening. If we do end up V-topping, what can we do? We can draw a trend line off the lows, up around that high, and as I say, right, sell traps as it rotates down. Sell traps, okay? The most important thing you can do right now, if you haven't done so already, is learn to trade traps. Traps are my favorite out of all the entry patterns we look for in our trade room. That's the way you trade it as it rotates, right? As it rotates back and forth. We always say in our trade room, right? In a range, failures at the edges and traps as it rotates, right? Buyer failures around the edges. As it goes lower, we look for traps as it rotates. All right, guys? So again, now we have us covered no matter what we get for tomorrow. Remember, rookies make predictions. Experienced traders, professional traders, they go through different scenarios. They visualize different scenarios because anyone who's been doing this for a while knows that anything is possible overnight. It makes no sense to make predictions. Get ready for different scenarios. That way you have the mindset and the strategy you need to make money if we do break out or if we do fail off that high. I like the way that game plan sets up. Now let's talk about buying right off that low. Like I said, that's a very desirable trade. I mean, you could even look at this and say, wait a second, right? Could this be one big channel right there, right? It seems like that would be a beautiful area for a bear trap, right? Prior support down there. Gorgeous. Okay. How do we buy it if it goes lower here? Let's go to the Nasdaq here right now. Nasdaq is, again, it's almost the same exact situation on the NQ and the QQs, right, as it is on the E-mini and the SPY. Wild moves, big move down, big move up, big move down. Again, when markets make these wild moves like that, think about where the strong moves are that have not been retested, right? We had that strong move down on Thursday. They retest the low. They punch their ticket. Now, again, instead of taking out that low there, they now make the rotation going higher. And the logical case right now is a run up to take out that high. Again, as I mentioned before, on the S&P, there's clearly a range starting to develop. It smells a bit range bound in there. It wouldn't surprise anybody. It wouldn't surprise anybody if we saw a strong move, shallow pullback, higher high in price. What do we call these? Traps, baby. That seems to be a very good place right there for buyers to load the boat. Look left. There's one right there, right? There's one right there. Strong move, shallow pullback, higher high in price, traps, baby. So if history repeats itself, we may get, and this is not just the Nasdaq, it's also the S&P as well, right? But we may be in store here for a bear trap, just going to shake out people and then run back up. I like the idea behind that. So now let's drill down now. Let's talk about this, all right? So here on the NASDAQ. Now, the NASDAQ, I would say, looks a lot more bullish than the S&P does because you'll notice right away, it's same idea. It's a bull market into a trading range, but I think you can probably see, right? You could definitely see it almost looks like a spike in channel. Now, if you're a student of mine, in my video classes, we talk a lot about spike in channels. Where do spike in channels love to pull back to? They love to pull back to the base of that channel, right? Which in this case is right around there, right? Right around that 952 and 3/4, right? Imagine there's your spike up. Here's your channel, right? The pullback is oftentimes the base of that channel. We talked about that area at 52 and 3/4 a few moments ago, right? So we know where that area is going to be off the 60-minute chart. So I definitely like the idea of being a buyer on this. Everything I've talked about so far on the S&P can be applied to the NASDAQ, right? Traps as we go up, breakout pullbacks, right? Crown reversals off the high. Everything I talked about on the S&P can easily be applied to the NASDAQ. In fact, the NASDAQ has so much, look at that open space overhead. There literally is a mile of green space or blue skies above us there on the way back, taking out that high. Remember, whenever we have a lot of open space like this, one of those pop and grinds can be very, very common because if buyers can get their punch through, it can easily squeeze and kind of vacuum on the way higher, right? So if it does kind of squeeze up and begin kind of grinding, you know the giveaway, right? Market high, market low, grab that first test, right, off that low, and again, on the way up, it's those traps. Okay, I don't want to repeat myself too much on this video, but the NASDAQ looks even more potential for that potential pop and grind I mentioned earlier. Let's talk about the buy side as we go lower, all right? There's a little bit more nuance to this NASDAQ. So, for example, with that big bullseye back at last Wednesday's high, basically last week's high here, I want to buy down around the lows, right, of that range. But this is where that channel comes in. Okay, we're going to call this a shallow trap pullback. Now, I'm open-minded to buy the low of that channel. I'm open-minded to it. What's the problem, though? What's the problem if I buy that low? Remember those two questions earlier? How's my location and how is my momentum? Remember those two questions earlier? Okay, if I buy right there, how is momentum? It's great. right? We're still pretty bullish overall. Momentum is great, but that's not good location, right? Location, not good. Why? Because I'm buying relatively high, right? It's only a very shallow pullback in this range by market. So my location is not ideal. If I want to be a buyer, but I'm worried about buying too high, what's the entry pattern, guys? You know this. What's the one entry pattern that allows me to buy as low as I can? It's a bear trap. It will always be a bear trap, right? A bear trap will look like this. And again, the goal here is to buy as low as I can. Again, not my favorite trade for tomorrow, but that might be all we get, right? Look closely, you'll see one right there. We go lower, the bears try once, they go higher, they try twice. It's a bear trap. Okay, lots of examples of these inside the free trading course. Again, my favorite trade, right? These are types of trades in my eyes. These are half-size position trades right here, right? Those are half-size trades, right? Because you're just simply buying so high. Again, good setup, but I'm not going to go full boat, right, on something like that. That is what I would call buying a shallow trap pullback or a shallow pullback trap. Now, I think where everybody wants to buy will be a nice steep pullback, get into triangle support, get into prior swing support, and rope in some of those bears. Okay, what you want to think about is, remember we talked about earlier, whenever we have a trading range, what do? We look for failures around the edges, right? Failures. In other words, when I say failure, what I mean is I'm going to wait for that pullback. I'm going to let those bears get in, right? I'm not a big fan of trying to pick bottoms. Okay, if we learned one thing last week, what we learned last week, do not pick tops and bottoms because sometimes they keep on going. You know what I mean? Like last week, they kept on going and going and going, right? So that's a fool's game. That's a rookie's game, right? Picking bottoms like this. Don't pick the bottom. Wait for the bears to get in, right? You'll make a little bit less money on these trades, but there's so much higher percentage, right? Yeah, I could try picking that bottom. I would much rather wait for those bears to get in, though. See where I can see where the stops are and buy right into those stop losses. Remember, when it comes to ranges, failures around the edges, right? Failure patterns around the edges. If you're taking my free trading classes, you know these setups. Okay. Now, as we go higher, what's the next best entry? Traps, right? Failures at the edges, traps as we rotate. Okay, remember this, failure patterns at the edges, failures at the edges, right? Edges, and then as we rotate back and forth, it's traps, right? Why? Because traps will get you in at the lowest possible price. If we're lucky, draw a trend line off the highs, bring it down off that low, and get a channel as it rotates up off that low. All right, guys, that is that seller failure, right, off the range low. Okay, now that's kind of the dream scenario right there. What if it V bottoms? If it V bottoms off that low, right? These can be pretty frustrating because I want to buy the low down here, but there might be so many buyers down there. Like I said earlier, that spike and channel pattern, there might be so many buyers down there. It may simply just V bottom off of that low. So I may not get the failure pattern, right? If I don't get the failure, what's the next best setup? The trap, right? It's the one that comes afterwards. The trap will look like this, right? It'll pop up and begin to what? And begin to grind and grind. Again, look left, find those prior swings, and go in for that trap. If we're lucky, we'll get that, right? That channel high, that channel low. And again, I'm looking for that first test off that channel, okay? So again, the ideal is we buy nice and low. But again, I'm not going to pick a bottom. We know that by now, right? Picking tops and bottoms is a rookie mistake. Okay, don't pick tops and bottoms. Wait for the failure. Okay, if the unfortunate situation happens, we don't get a failure pattern, don't cry about it. Wait for that pullback and get in on the rotation going higher. That is the V top, right? That is the V top, V bottom off the range low. And again, like I mentioned earlier, right? We're buying traps as it rotates off the low, right? Failures around the edges, traps as we rotate back to where? Back to retest what? Back to retest the highs, right? Markets want to rotate back and forth. Okay, so now you know the game plan to buy this. what if I'm wrong? Or what if it fails, right? It's not so much being wrong, but what if it fails, right? What if this thing fails off the high, rips lower, and keeps on going? How do we know? How do we know down here? How do we know when we can start selling this instead of buying it? It's very simple. Look what's happened every time we've gone below the 21 moving average under the range. What's happened? Every time we try to go lower, the bears came in, they tried, and they failed. Every time we try to go lower, the bears came in, they tried, and they failed. So I'm going to assume that'll happen again. We go lower, bears come in, they try, and they fail. If they do not fail, right? If they hold that pullback, and this is not rocket science, right? If they pull back to the 21 moving average and they hold that pullback and they jump, right? We call these 1, 2, 3 breakout patterns. If they jump off that moving average and simply torch through all of these support levels, now we know where the market wants to go now. Now we know it's going back into that trading range, and it'll probably try to take out these highs and lows and rotate back and forth. So think about last Friday's low, same thing on the S&P for the most part. Last Friday's low, right down there. Again, they'll be slightly different in the Nasdaq than the S&P, but the general idea is the same. If we take out these lows, if the bears come in and can successfully hold that pullback and jump off that moving average, okay, now we do is we go out, we find our new channel, mark off that low, we find that channel high, and what do? We go in for that first test off the high of that channel. I love traps, but anyway, this could be any entry pattern. Failures, pullbacks, strength trade, and remember, we talked earlier about range breakouts, first leg, right? Third leg. Remember, the easiest way to make more money in trading is not trade more often. It's get better at maximizing your winners. Whenever we have a trading range, we know the breakout leg is the measuring leg. We may not know how deep that pullback will be, but once we do, then we know how big that measuring leg is, and that will give us the information we need to squeeze all that profit out of that runner. All right, guys? Remember, though, if it runs lower, I don't care how strong that pullback is. I'm still looking for the bears to show me proof. If they don't, we're probably going right back up into that trading range. But if they can hold that pullback and keep going, okay, now it's on. Now find that low, find that high, and again, looking for that first test off the high of that channel. Again, any of the entry patterns we're looking for tomorrow in our trade room, right? First leg, third leg. Okay, now you've got the game plan for tomorrow. But you know what time of year it is, right? It's late August, right? It's the last week of the summertime season. I would be surprised if we don't get some curveball, right? Something surprising us tomorrow morning, and that is why we have our trade room. Every morning, 8 o'clock Eastern time, we get together, we trade this stuff together. The plan has been put together tonight. Now all we need is a good night's sleep. Come back tomorrow and trade this plan together. If you're looking for a place to come out and learn this stuff and trade along with us, every morning, 8 o'clock Eastern time with all the members in our morning trade room. I'll put all the information you need down in the description of the YouTube video. I'll put trade room information. I'll put the free course information down there. I would definitely recommend, if you're here for the first time right now, take the free classes, get that started, get learning the basic strategy. That way you're warmed up and ready to go with us in the morning trade room as a member in the near future. All right, guys, if you get any questions or trouble getting access to anything we talked about here tonight on the video tonight, don't be afraid to call the office. My wife Megan and I are always here to help out. If you have any questions, we got live chat as well. So if you need help, don't be a stranger. I would love to hear from you. We can help out with any questions you might have along the way. In the meantime, though, let's wrap it up here for tonight. Great lesson tonight. Hope you learned a bunch tonight. Hope you use this knowledge to make a killing tomorrow. Hopefully, I'll see you sometime soon in our morning trade room. In the meantime, be well. Be nice to each other out there tomorrow, and be here next time. Adios, amigos. Bye-bye for now.